The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks for tuning in, starting your day, 9:06 a.m. We got 24 minutes to go until the start of trading, and we got a tame market to kick things off. We might see some low volatility until about 2 to 2:30 p.m. Eastern time today. It's Fed Day, folks. Meeting started yesterday. We get an announcement at 2 p.m. today. We get a press conference with Chairman Powell at 2:30 today. Lots to talk about for the chairman and the Federal Reserve as they will be digesting whether it's the pure job numbers that we've had over the last 2 months, the inflationary data that we've had just recently, all of that contributing. We're going to get a dot plot in terms of when they anticipate they could be raising, I should say, interest rates. They're going to talk about bond buying, I'm sure, and Chairman Powell is going to have some questions talking about inflation, whether it's transitory or not. I anticipate, my own personal bias, that Chairman Powell will be in there, and he's got enough ammunition within that inflationary data, which is why we're seeing the market doing what it has been doing in terms of the 10-year right now, sitting with a yield of 1.487%. The market, considering that inflationary data, when you think of the likes of being contributed, used car vehicles contributing almost a third of the CPI data that we got recently, those types of anecdotal data, it's not really anecdotal, those types of data points, I should say, is going to allow the chairman to, at least for the meantime, express that transitory inflationary data is there. I don't anticipate they're going to be that worried about inflationary data, at least from the chairman this afternoon. But guess what? We find out at 2:30 p.m. Eastern time today, and the market will be waiting on that news in a big way. This morning, kicking things off, S&P is basically flat at 42.36. Tech stocks marginally higher. NASDAQ 100 up by about 25 points at 14,047. Dow slightly in the red by 35 points, or about 1/10%, 34,142. And we get the Russell right now, negative by about 0.3%. Bitcoin trading at about 39,000. We got gold right now, $1,860, down about, up $3 in the session, basically flat though from where we were towards the end of the day. Silver's up 24 cents, catching a little bit of a bid in silver, and notes and bonds ahead of the Fed meeting, conclusion, announcement, and press conference, getting a little bit of higher price and lower yield, only by a few ticks, but the 10-year's up 3.5 ticks right now at 132.20, pushing that 10-year yield to 1.485%. 1.485%. All right. Jumping around to what we got going on, let's talk about the Fed, because it's going to be the news of the day in a big way. Fed debate moves to bond taper and liftoff decision day guide, as Bloomberg puts it. So they talk about the dot plot in here. May show first interest rate hike in 2023. A number of participants are ready to slate tapering planning. Be interesting to see when they start talking about it versus when they start actually thinking about implementing it. With inflation and economic growth accelerating this year, as they put it, Federal Reserve Chairman Jerome Powell and his colleagues may consider moving up a discussion on scaling back monetary stimulus and penciling in a first interest rate hike as soon as 2023. So that's how they put it. What to keep in mind here, if you remember what Chairman Powell has said so often in all of these press conferences, is their mandate is full employment. Okay? Keep it in mind, folks, because that is what is on Chairman Powell's mind. Full employment. He's not worried about the S&P making new highs all time on a daily basis almost. He's not worried about those tech stocks charging to ridiculous lofty levels, bringing the NASDAQ 100 to all-time highs as well. The stock market, unfortunately, not a good indication of the job market in terms of job health, economic health sometimes, not a true reflection of what could be going on as you have some of those big stocks just plowing ahead, not necessarily indicative of a strong jobs market. We're still about 8 million jobs under where we were prior to COVID. That, in my opinion, is the biggest thing on Chairman Powell's mind, aside from possible inflation. There's the kicker, folks, okay? Chairman Powell plans to be in there with stimulus. He plans to be in there with bond buying until we get those jobs back. What I try and wrap my head around is what happens if we don't get the jobs back quick enough and inflation becomes something that is not as transitory as we all think it may be when you have used car vehicles contributing a third of CPI, but it's record type of inflation almost across the board. PPI was a huge number yesterday as well. Not as important as CPI sometimes, but nonetheless, staggering data. Okay, there's a valid arguments to be made that it's transitory in a big way. We're all going to find out whether it is in the near to medium to long-term nature of things. But Chairman Powell is going to be in there. He's going to be pumping money, stimulus, $120 billion of bond buying a month. Remarkable when you look about a month, $120 billion of bond buying a month, okay? They're going to be in there until we make up those jobs. Doesn't seem like we're going to make them up in an instant. The whole idea of all this stimulus was that you're able to turn the key, right? You keep these businesses open that had to shut down during COVID, all right? You keep them with the ability to literally turn the key, open the doors back up, bring people back in to the workplace, and just like that, we bring back all those jobs now that we're in a more normal environment. Doesn't seem like it's going to be that easy, folks. April jobs numbers, 266,000, right? Something like that. May jobs numbers, what was it, 566 or something to that degree? Not quite on the pace to make up 8 million jobs. And what you have to remember is every month that passes by, the economy would create jobs anyway from population growth. Okay, so we need to make up about 7 to 8 million jobs just to get back to where we were prior to COVID. But what you have to factor in is there should be normalized job growth over the period of about 16 months that we're at now. 16 months of job creation that you have to add on to the jobs that we haven't created, as in the jobs that we had lost prior. So it's going to be interesting how it plays out. Inflation, the big worry here on my head in terms of inflation starts creeping in and we haven't made those jobs back quick enough. The worry is the Fed may have to taper some of the stimulus they're providing before we've made back all those jobs. If you have an environment where we're not making back the jobs yet, you have the Fed having to tame the stimulus because of inflation. That could cause some worry in the market in a big way, but it ain't happening yet, folks. And I imagine this meeting, not the meeting that's going to happen. Chairman Powell's got enough raw data out there on his side, he really does, to argue that, guess what, we're not even close to there for full employment, so we're going to be in there. We're not talking about tapering yet, okay? We're not. We have not added the type of jobs that would force the Fed to talk about tapering, and I think you're going to see him say that, guess what, we've also not seen the type of inflationary data that would cause us to worry about that as well, because as of right now, Chairman Powell is looking at transitory nature and some of the influences going into that inflationary data, and I imagine that's what he's going to say. But we're going to get a dot plot. We're going to get to see what some of the Fed governors are thinking in there. As they put it, you had Paul Tudor Jones out there. They're quoting him saying it's one of the most important Fed meetings with Jay Powell's career, inflation accelerating and the job market tightening. Initial focus, they talk about the dot plot. 7 of 18 officials in March, this is. Remarkable, they last met in March. Think about what's happened since they last met in March. Tremendous action. 7 of 18 penciled in a 2023 rate hike last time, meaning that if 3 adjust their dots higher, it would bring liftoff forward into that year. You'd have a preponderance, right, coming to 10 to 18 if you get to that level. They're likely to bump up its rate forecast, though it's a very close call, according to economists. FOMC may raise its economic growth forecast for 2021 to 6.6% and its inflation outlook to 2.7%, while looking for an unemployment rate of 4.7%. We're going to get into this a little bit more throughout the show. It's Fed Day, folks. We got to talk about it. We got a lot to talk about indeed. We'll be coming back with our man Kevin Hinks as well. We'll be talking options, folks. Stay tuned. We'll be right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We got the S&P's positive by 1 point right now. NASDAQ positive by 26, just kind of hanging out where we've been most of the overnight session. Jumping back to the Fed discussion. So, tying into where we are and what they're going to be talking about. So, the committee's likely to bump up its rate forecast, though it's very close call, talking about economist survey by Bloomberg. The FOMC may raise its economic growth forecast for 2021. Economic growth, I mean, staggering numbers everywhere. It's quite a time to be in the market, folks. 6.6%. They may raise that to, and its inflation outlook to 2.7%, looking for an unemployment rate of 4.7%, which is slower pace of improvement than seen in March. Investors will be looking for the dot plot. You get an economist out here saying a little bit more hawkish as the committee potentially be looking at higher inflation. Faster growth in inflation makes a rate hike more likely in the future years. When you look at where they are in terms of the GDP growth, now this is black is 2021. This is the red is 2022. And the blue is 2023, and then the yellow is longer term, okay? So this is the growth and inflation make a rate hike more likely in the future in terms of where they're looking at, okay? And you talk about GDP growth, right? Staggering. When you look at 2021, 6.5%, still pretty amazing numbers. 2022, 3.3%, and 2023, yes, 2.2%. The unemployment rate from 4.7 maybe to around 3.5 or 4% on the longer term basis. Getting into what else they have. So the statement, this is interesting when they talk about what they may have in the statement. Likely to reflect a positive outlook for growth, not too surprising there, as well as acknowledge higher inflation, while repeating the price gains largely reflect transitory factors. Okay, now they're expected to repeat that it will continue the pace of bond buying until substantial further progress. So stay on this one, because analysts, wherever you get your news, whether you're, reading the actual statement itself, okay, substantial further progress has been made, okay, on employment and inflation. Now, here's the part. Though it's possible, could tweak the wording to acknowledge some progress. This is what I'm going to be watching, okay? You really want to really pay attention to whether they think there's any progress that's been made on the inflationary front, I would say, because we know the jobs front. Okay, we do. We know the non-farm payroll numbers there. There's an argument to be made that maybe the recovery is a little bit slower than we thought. Maybe we're now just reaching the levels of vaccination that's going to allow places to really open back up. But we're going to find out at 2 o'clock whether they're talking about, do they remove that word substantial? Maybe some evolution in the language makes sense. We're going to find out, folks. 2 o'clock is the statement. 2:30 is the press conference today. Let's jump over to our man, Kevin Hinks. Every trading day, folks, 11 a.m. Eastern time. Today's a good day to check out the program, I'm sure. Fast Market by the TD Ameritrade Network. Kevin Hinks, Alex Coffey, and the team breaking down the market action, walking you through hypothetical trades. Kevin Hinks, happy Fed Day, man.
Good morning, Tommy. Yeah, we finally get to learn what Jerome Powell thinks of this economy and this market in general. So I think we've had a lot of data out this morning, mortgage apps and housing starts and permits and import-export prices, and none of it matters, Tommy. It's all about how Jerome Powell frames this economy going forward. And so I think that's going to set the tone for the rest of the summer. Here's the good news, though. He's got a pretty good story to tell. He's got a recovering economy that is showing that the inflation is transitory. The move from 1% to 1.7 is now backed off to 1.49. So he's got moderate interest rates with a growing, strong economy. Now the question is, does he get questioned about crude oil? Does he get questioned about these input prices? That some of them are starting to come down off their highs. Lumber and grains are starting to break here off their highs, but crude oil isn't. So it's all about how he frames the health of the economy versus that inflation narrative, Tommy, and that should set the tone for, well, the weeks, if not months of this trading year, Tom.
It is remarkable. I was reading about this morning. They talk about the dot plot, of course, not, something that has to be followed, but eyes are watching it. We haven't got one updated, Kevin, since March, and I say it's really remarkable, man, what's happened in the last 2 months. I don't know if any of us have lived through a time where, you come out of maybe February, March. It's almost a binary. I was having a discussion just in personal life yesterday with a friend, and we were just talking about COVID and getting comfortable of just bringing your family out and getting back to real life. And we were just saying it is really remarkable how it's almost binary. We're able to get the vaccine, get back out if you have family safe and stuff like that. And you go from one essence of a year of lockdown to the next essence, Kevin. Last weekend I was out dining indoors and seeing a movie inside, man. And it's remarkable that we've turned that corner so substantially. But now it comes to, like you say, whether it's the 8 million plus jobs that we kind of have to get back onto the payrolls to get back to where we were prior to COVID. And what I can't wait for is to hear him talk about the inflationary data. And I agree, he's got all the data he needs to talk about transitory. If I was getting picked in a debate class, and they said, all right, I want one of you to argue it's transitory, I want the other one to argue it's not transitory, I would want the transitory side, man, with the data he's got going. But it is interesting, he's going to get all those questions. I want to ask you, Kevin, when you think about, because he's got two combative forces right now, which is the job market, of course, and employment, and then inflationary data. Where do you see this market going? And I'm asking you a tough question because we're looking really in the future here, whether it's a couple months or where kind of things get a little bit contentious of, is it transitory? Where would you start to worry yourself, Kevin, if we start to maybe just a little bit stall on the jobs numbers where, it's 500,000, it's 600,000, and we see this inflationary data, there? Because I imagine that Chairman Powell is going to be in there for the long haul to make up those jobs. But I see the one thing that might come into things is if that inflationary data kind of stays, stagnant at those levels, and the transitory argument becomes a little bit more difficult. Not sure it's going to happen, but it's definitely possible as we come in the next couple of months.
Tom, it's very possible. The biggest problem that Jerome Powell has now is he's still got enhanced benefits going through September. So there's a real chance that the non-farm payroll numbers that have been a little stingy on the upside the last few months are going to stay for another couple months because of what we've been talking about all along. People making more money staying home than returning to the workforce. And he's got these benefits that they don't come off the board until September. So that could be something that stalls the overall recovery of the U.S. economy. And, a lot of states are starting to pull these benefits back to get people in the workforce. And I think that's the next hurdle that this economy has. Get all these people off the sidelines, get those 9+ million jobs filled, or as many as possible, Tommy.
It's a great point, man. And it's just staggering numbers across the board. Whether you talk about the 9 million plus jobs, man, and then the inflationary data, it's like records across the board. But we all know, like you talk about, man, there's a lot of influences going on that are transitory. We've talked about ourselves, the used car data, the one that comes to mind, the headline number the most. But we find out, man, we got an announcement at 2:00 today. We got a press conference at 2:30. As we wrap up this, Kevin, we got about 30 seconds. What are you guys going to be talking about today besides the Fed going on, of course?
Well, obviously, we have we have one earnings report today, and I believe we're talking about. Let's see. I don't know yet. I haven't gotten the email yet on what we're covering today,
Perfect.
Tommy. But I know
they got a lot to they got a lot to digest. Planning that A block, C block, B block, Kevin. Well, today we know you guys are going to have a tremendous amount to talk about, man. We look forward to the program. We look forward to the education as always, Kevin.
Have a great day, Tommy. Thank you.
You too, Kevin. Thanks so much, folks. Tune in, folks, today, 11 o'clock, Fast Market. We'll be right back for the Market Open. Stay tuned.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Market's open, and we're getting a little bit of a lift. You got the S&P's up 4 points right now, trading at 42.40. 42.40, not a bad price point. We got the NASDAQ 100, 14,054, up about 0.25%. The Dow catching a little bit of a lift as well, 34,200. Russell, the only index in the red right now, by 6 points. All right, jumping back to the Fed. We're spending a lot of time on the Fed today, but it's a big data point, folks, in a big way, as we all know. Talking about the press conference here in this Bloomberg article I've been referencing, they state Powell could acknowledge that the FOMC will begin tapering discussions in upcoming meetings, borrowing a phrase from the minutes of the Fed's April gathering that was subsequently repeated by Vice Chair Clarida, though also emphasizing patience and a commitment to achieving full employment. Quite the balancing act that they have going on, right? In terms of tapering versus full employment. CPI data they talk about, 5% inflation surge. Powell may be pressed by reporters on how much of the price gain are temporary. Yet, you think he's possibly going to be pressed on that? Reporters ain't doing their jobs if they don't ask him about the numbers and press him on the expectations on inflation are shifting, whether they're temporary or not. The new improved framework we're all familiar with. They have a 2% inflationary goal, but they're allowed to overshoot that. A little bit different from where they were going prior. When you look at the balance sheet, this is what I really want to get to in terms of the Fed. How about that balance sheet? Talking about $7.78 trillion. They're buying $120 billion a month. So not surprising to see how that keeps creeping upward, all right? But it's going to have to get paired at some point, folks. And we'll see if there's any type of indication today. But the market is going to be paying attention in a big way. All right, what else we got going on? Pretty interesting that this takes such a back seat, but really when you talk about the market action, nothing too dramatic going on geopolitically wise. Interesting nonetheless with Biden and Putin meeting for the first time. I don't anticipate that we will have the president of the United States coming out and saying the president of Russia and former KGB agent is someone he trusts more than Americans like our last president. But nonetheless, it'll be interesting to see what each president comes out and says and how Biden comes out. It's supposed to be 4 to 5 hours that they're going to meet. They have their staff there, too. They're going to have breakout sessions, whether it's the Secretary of State, and then you got Lavrov over there for Russia. It'll be more than just president to president, as they'll actually have some of their staff meeting with the Russian staff, etc. So lots of meetings going on over there in Switzerland today. All right, jumping over to commodities. China. Interesting what's going on here. China's campaign to control commodities goes into overdrive. Now, state firms ordered to curb overseas commodities exposure, and China is going to release metals from their secretive state reserves. You get into this, and it's pretty interesting. So I'm going to just surmise what we have going on. So China's stepping up the campaign to rein in commodity prices. We all know that commodity prices could put a hurt on an economic recovery where you have rising prices in a big way, reduce speculation in a bid to ease the threat to its pandemic rebound from soaring raw material cost. State-owned enterprises were ordered to control risks and limit their exposure to overseas commodity markets by the State-Owned Asset Supervision and Administration Commission. According to People of Knowledge, the companies have been asked to report their future positions to review, said the people. I mean, this just doesn't happen in democracies, folks. Thank goodness, right? In terms of having to report to the government what you're doing. And then in a second development, the National Food and Strategic Reserves Administration will soon release state stockpiles of metals, including copper, aluminum, and zinc, the agency said in a statement yesterday. They're going to be sold in batches to fabricators and manufacturers, it said, without giving the volumes to be released. My dad was emailing me about this today, and he made a good point. You know, eventually they're going to reload the coffers. And I'll put it as he says. They're going to have to fill the supplies after this first release time. Since 2005, they released copper. So interesting to see how that plays out. But, man, you know, China, they play the long game. And if they're in there and they're going to be trying to squash the price of commodities almost on a worldwide basis, that may put a little bit of a hamper on commodity prices for the time being as they look to squash those to enforce their own economic rebound. Okay, jumping around to other stories we got going on, we'll jump to GM. They are upping their spending in a big way. So how about electric vehicles, and autonomous vehicles? They're upping the spending by 30% to $35 billion by 2025 on higher profits. That's quite a number. I'll give you that. But realistically, and they're getting a nice lift, up 3% today on that news. Now, I bring it up because you jump over to the Analyze tab. All right, we're going to scroll down on the Thinkorswim platform. GM's talking about a $90 billion market cap for that company. Okay, what's Tesla pushing today? Let's see. I mean, just staggering numbers when you think about Tesla. And $578 billion. And that's only at a price point of 600, folks. They were pushing $900 billion when Tesla was at some lofty highs. And I bring it up because, GM's got a lift. They're at $90 billion. Tesla's a $600 billion company. $35 billion sounds like a lot, and it is. But that's the next 4 years or so. And you're competing in an arena that's just going to be insanely intense in terms of spending that's necessary. GM also said it now expects adjusted pre-tax earnings between 8.5 and 9.5 billion during the first half of the year. All right, so look at the money that they're spending and look at the money they're making. Now, they're upping the amount they're spending. The market loves that. They have to do it to compete in the electric vehicle segment, I'm sure. But they're making almost $9 billion in 180 days. And they're only spending on electric vehicles $35 billion over the next 4 years or so. Be interesting to see how that plays out. I imagine it's going to be a very capital-intensive quest for GM, but they are going to increase the spending to $35 billion through 2025. That's a 30% increase on what they had prior. Racing to catch up with electric vehicle leader Tesla and compete for leadership position against other well-established automakers such as Volkswagen. GM plans to sell more than 1 million electric vehicles annually by 2025. The market likes the news nonetheless. And electric vehicles, folks, that is the future. And these car companies better get on board because it's almost too late if you want. I mean, Volkswagen in itself, they've been talking about it in a big way, pushing their fleet over to complete electric vehicles by, I think, 2025 itself. And their stock's been paying dividends on that news as well. But nonetheless, back to GM, just to take a long-term look in terms of that equity, they're up 3%, today. It's been quite a rebound from $14. You came into COVID at about $35. You back this up on a longer-term basis, though. We were as high as $95 back in the good old days of 2000. This thing tanked to 27 cents. And maybe that's a full BK there on when 2008, 2009 in the bailout, etc. But nonetheless, quite a resurgence up to $62. Still only a $90 billion company, though, when you look at Tesla, $600 billion company. Really tough to play catch up in that environment when you got such a behemoth, because Tesla's going to be plowing money until 2025 into electric vehicles as well. And meanwhile, GM has to actually play catch up in that industry. All right, jumping around to some of the FANG stocks. This is going to be a crazy chart because it's a long-term one. There's Amazon, back to $1.31, back in the year of 97. Yeah, we'll put it on a 15-minute, though. Amazon up 0.5% today, sitting at about $3,400. Tech stocks, NASDAQ 100 up 33 points. Just don't stop. Microsoft shares up about 0.33% today. Google shares down marginally. Google almost making all-time highs on a daily basis. I think that's an all-time high yesterday at 25.37. Stay tuned, folks. We'll be right back after the break. We'll take a look at some of the stocks that are moving today to start things off. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&P's flat right now. We got the NASDAQ 100 continuing to run up 46 points right now, 14,068. Jumping back to what else we got going on to the stories that I'm taking a look at this morning. So we got mortgage numbers. Mortgage refinances rebounding as rates drop temporarily to lowest level in a month. We're all familiar. We get the 10-year right now sitting at about 1.48%. The average rate for a 30-year fixed mortgage with the conforming loan balance decreased to 3.11% from 3.15. Total application volume rose 4.2% last week from the previous week. Still remarkable that there's people who are just waiting to refinance on that last little dip. Seems like if you are in the market at all, that I would think about refinancing ASAP, like right now. That's what I'm talking about, because why would you wait any longer than that, right? In terms of if you're thinking about it, if you're considering it, we're at 1.48% right now. Have to consider that would be a good place to do it. But nonetheless, the market persists in terms of those numbers. Every time we get a little bit of a dip, you see that resurgence. Total application volume rising 4.2% last week from the previous week. Refinances led gains, rising 6% for the week. Still 22% lower, they mentioned, than the same week 1 year ago, because so many borrowers already refinanced last fall. Not surprising there. I mean, we were down to about 0.5%, right? 0.6% at the lows. The average contract interest rate, 3.11, as we mentioned, and that's talking about conforming, 548,000 or less with a 20% down payment. And housing starts was the other data that we got this morning. U.S. housing starts rise less than expected in May. Building permits fall. The U.S. home building rebounded in May, supported by an acute shortage of previously owned homes available for sale. That's a continuing theme in a big way. Housing starts rose 3.6% to a seasonally adjusted annual rate of 1.572 million units. In just 1 second as I pull that up. Construction continues to be hampered, of course, by very expensive lumber. Some of these are really pulling back in a big way, though. Lumber, I saw, has pulled back pretty substantially from some of the big highs we had in May. Housing starts up 3.6%. And, the housing market, though lumber prices dropped from record highs set in May, softwood lumber prices increased 154.3% year on year in May. The year on year comps, not really a great comp in terms of the year where we are, but nonetheless, lumber prices, of course, as we're all aware, higher than they have been in previously. All right, folks, let's jump over to our man Teddy Kegstead. Every Wednesday at 45 past the hour, we talk to our man Teddy. You can reach Teddy every trading day at forex-trading-unlock.com. Teddy Kegstad, happy Fed Day is what I say. How's it going, man?
It's going well. It's going well.
So, of all the things going on, Teddy, we got Fed Day, and what are you looking at as somebody who lives and dies Forex, man, on a day like Fed Day? What are you looking at in this market, man?
Right now, I'm looking at the divergence in the currencies right now. So we have, obviously, the dollar has been trickling a little bit higher over the past few weeks. Is the dollar a bull? No, it's more of an upside correction right now, I think, for the most part, because there's just so much going on the geopolitical stage as far as when it comes to the economies of the world, literally. Last time we spoke, I told you that the economic numbers are more and more going to become the numbers that you have to watch again, which is good because now we are coming out of this ether that we've been in for the past year because of the pandemic. Like, things are getting back to reality as far as what people are looking at, you know. So yes. The numbers really matter. So if you look at most of the cross rates right now, the dollar's been inching higher, but nothing really significant, you know. Like, the pound is a little weaker, the euro's weaker, the Swiss is finally turned against the dollar, you know, where the dollar's gaining strength. But the irony of it all is all these markets are pushing a new dollar high, if you will. The one market that isn't is the U.S. dollar yen, where they completed a lower move high a couple sessions ago, and they're weaker, you know. And the funny thing is, like, remember the last time we spoke, I said the commodity trade is off the table now. You know, now it is about the economic numbers. We already experienced the boost that the currencies would get from oil. That's off the table. We're only a couple dollars away from 75 now, you know. So, I mean, like, that reality is settling in, you know. And I heard you speaking just before I came on the air about, you know, a little bit of a retracement in commodity prices. Well, this is because of the fact that transportation costs have gotten so high. Inflation has kicked in so much. Now think about, except for affluent people, remember last year a lot of people were doing remodeling to their homes, you know, and then we had all the, you know, the uprisings that happened last year. You know, we had 6 months of the cities being boarded up and stuff. So the supplies of lumber and things like that were totally depleted in this country, you know. But the past couple months, the mills are back online, what have you. So we're refurbishing our stocks, but now we're losing buyers because it comes down to the average homeowner now. They're not going to be redoing their kitchen this fall, you know, or this summer, when they're looking at every time they go to the gas pump, they're paying literally, you know, 40-50% more than they were just a few months ago, you know. So I think that we're finally seeing these numbers, you know, like the Fed, like I heard you say, is going to be pressed about inflation. Well, you would have to be completely obtuse to think that we don't have inflation going on, and let alone that it's not going to continue, you know. So we don't need the Fed to tell us that. I think what we really need to see from the Fed is, what are they going to do with rates? And that gets back to currency pricing too, where the bonds now, you've seen it over the past couple of days, have been trickling lower. Nothing significant, but this is what we're going to be watching for now as we unfold with these numbers, especially the oil numbers that come out later. We have the unemployment claims tomorrow, you know, and as we move forward over the next couple of weeks, you know, the major numbers, like we saw what CPI did, you know, PPI, these are the ISM number. These numbers are going to be very, very influential as far as what's going on in the future, you know. And I think that the dollar is getting a lift from these things, except for with the yen. That's the one. Remember how before the pandemic, you know, we've always talked about, you know, if the dollar is a bull, it's a bear in the yen, and vice versa, you know. Well, now we have that, the dollar trend, which has been strong over the past couple of weeks. Now the dollar's still inching higher, but not in a big way with the other currencies. But with the yen, it's going the other way. So that divergence tells me that the free-flowing market mechanisms are really coming back online, which is good for traders for sure, you know, because we're not worried anymore about, you know, we're not worried about COVID results, you know, like where everyone's looking at the spiking in this and things that you would never, ever factor into your trading or your investing and what have you. So that's where we're at right now. I don't really have any points for you because the euro, if you look at, it's only been a couple bucks as far as the move against the dollar.
Yeah, some pretty tame action. I know I pulled up the Forex getting ready for you to come on, and not compared to some of the moves we've had at least recently on a weekly basis, not too dramatic of a move. And I agree with you, man, on the inflation deal. What I can't wait for is, I had talked about it a little bit, I think Chairman Powell has all the ammunition he needs, though, to at least argue it's transitory. There's enough data points in there that's going to give him enough cover. At least to make that argument. It might be a valid argument. We're going to find out, right, in the months to come. But it's here, man, as in that argument can only be made, just like you say, because we're back to life. And those kind of external factors are going to wane away. And then he's going to have to answer for whether it's transitory or not. And I think in the next 2 or 3 months, things are going to get even more interesting, man. Well,
Absolutely.
Teddy, man, we appreciate the update as always. Folks, check them out, forex-trading-unlock.com. And hey, we'll be watching today. We'll talk to you next week, Teddy. Thanks so much, man.
Absolutely. You have a good one.
All right, have a great one. Stay tuned, folks. We'll come back right after the break.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based, vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. It is Wednesday, July 16th today, folks, 4 p.m. Eastern time, right after my dad's program, Dave White. He's going to be in there with subscribers to his newsletters and services. You can check it out on the front page of TFNN under featured content. Subscribers to his daily newsletter, The Path of Least Resistance, his weekly newsletter, The Technology Insider, his software program, The Art of the Timing the Trade Charts. All those subscribers, they're going to gain access to this options webinar going on tonight. And folks, it is quad witching this week. And that is when you do you get? You got single stock options, you got single stock futures, index options, and index futures all expiring on Friday. This, when we have options volume exploding over the last year. Dave's going to be in there. He's going to be talking about, folks, to get the headline of the webinar he's talking about. The title of this webinar, Ensemble Methods for Option Expiration Plays. Dave's been on Tom's program a couple times this week talking about what he's going to be doing. And what he's looking at is he's looking at options, folks, that maybe you get in at an asymmetric level, as in you're risking $1 to make maybe $4. Maybe you're risking $1 to make $8, okay? He's getting into options. Maybe they're priced at about 25 cents, looking for a little bit of an acceleration in the direction they're looking for. Maybe you sell them at $1. I encourage you to check it out, folks. I'm going to be in there. It will be archived. And if you're into those types of trades, okay, you can sign up for any of Dave's services, okay? But his trading newsletter is where he's going to be executing those trades going forward as well. Path of least resistance. He puts out an update every single day. Technology Insider is more of an investment newsletter. He puts that out on Fridays. I encourage you to check out the Path of Least Resistance. He puts it out every day. That is the newsletter that he'll be recommending those trades. But either way, sign up for any of them. They all come with a 30-day money-back guarantee, folks, for new subscribers. So you got nothing to risk if you don't like it. If you like it, you get to stay on, okay? And you'll gain access to that webinar at 4 o'clock tonight. Ensemble Methods for Option Expiration Plays. Monthly options expiring on Friday. We got quad witching going on. We got Fed Day coming up as well. Great day for a webinar at 4 o'clock. I'll be in there as well. Encourage you to check it out on the front page of TFNN.com. And with that, we'll wrap it up with the VIX. It's also a great time when you get the VIX at 1669. And we're right near post-COVID lows of volatility. Always nice when you're the one paying the premium in that options market. Thanks so much for tuning in, folks. Stay tuned. We got our man Basil Chapman coming up live next. Live programming all day at TFNN. We're right back, folks.